Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 14th of October 2019, so welcome everyone. Welcome to this Monday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so also just a quick apologies for the last week's Friday's absence of the trader's tea time. I was experiencing a few issues here on the technical side, and basically that I was not able to kind of stream the video easily, so there were a few complications. Hopefully everything's fixed now. So yep, as always guys, before we jump into the charts, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD bank website, but specifically our JFD research tab here, which you can always check out, and I believe you can find a lot of useful stuff here because it gets updated on a daily basis. So yep, feel free to visit us here. But for now, let's jump into the charts. Now, the first one I want to touch on here is the DAX. So last week, as you know, we had a fantastic or should I say, a very interesting week, especially Thursday and Friday. So the equity markets exploded to the upside. And looking at this technical picture here, and I talked about DAX last week. Basically, what I was saying, that if we get a push above this level right here, the 12,142, then there is a possibility we could see a test of this area right here near the 12,312, 15 zone. But as you can see, it continued to travel higher, and it managed to reach this other key area of resistance near the 12,500 zone. So it overshot it by a little bit, and closed the week slightly above it. But looking at the cash index right now, because the market is still not closed, but the cash index is running, and it's currently slightly below this 12,500 zone. So in a way, still everything's looking quite interesting, quite positive here. The only thing is that for us to get comfortable with the upside, ideally, we would like to see another strong push above the 12,500 zone, and then we will aim for the 12,600 or even the 12,656, 55 territory around here, which is the highest point of July. So this is going to be our initial target. Then after that, we'll have a look at what he wants to do then. But again, like I said, for if we do get a break above this the highest point of July, then well, it could be opening the path towards levels around the 12,750 zone, and that was near the high of the 6th of August. So we're going into those areas. We could in a way then target the highest point of the July of 2018, and by the way, the August and the level that I was talking about, that's 2018 as well. So so yep, basically we're going into those, but again, like I said, we need to see a push above the highest point of July 1st before we could examine the 2018 levels again, the ones seen in August and July. But for now, the main question here is, given that the cash index is currently retracing a little bit, I mean, we of course, given the sharp steep here, there could be a possibility of a bit of more retracement here, maybe traveling back maybe all the way here towards the 12,312, 15 zone. If if this area holds again, then we could see this one curving up and pushing to the upside again. But if it starts dropping here below the 12,300 zone again, then, well, I mean, it increases the chances for a slide here back towards the 12,142 zone around here. But if this gets broken, this way the index would be placed below its 200 EMA on the 4-hour chart, and then yep, more sellers could be joining in. So that's why for now, any kind of move lower could be seen as a temporary correction, as long as it continues to trade above this 12,312 territory. If it struggle, if let's say, or should I say, if it drops below this, this is the little territory for us to start getting a little bit worried. But if it falls below the 12,142 zone again, then yep, we will aim for slightly lower levels. So keep your eyes on this one. But for now, see, everything seems to be looking more positive than negative, and especially if we get a push, another strong push above the 12,500 zone. So keep your eyes on that one. Gold. Quite an interesting one. So last week I talked about this one. This is what I was talking about. Basically, I was telling you about this potential slide. If it fails to push above the upper side of the falling channel formation, the commodity is still inside that pattern. For now, it seems that it's willing to drift further down. It traveled all the way here towards the 1475 zone. I talked about this one last week. Had a nice rebound and retraced back to the upside. So of course it broke this 1487 zone that I talked about, but to be honest, looking at this price action here, it's probably not this level no longer. This level is an important one. It's probably this one right here, around the 1488.5, something like that, approximately around there, because that's basically the low of the 8th of October. And this is where the retracement kind of got held. So after the commodity hit the 1475 zone, it retraced, but as you can see, currently struggling to push above this 1488.5 zone. So which also coincides with today's pivot point. So for now, again, as long as it's going to stay here, we will continue aiming to the downside. We will aim for the 1475 zone again, but if that fails, then yep, a slightly better target for us is around here near the 1459 zone, approximately around there. That's the low of the 1st of October. But if that fails to withhold, then yep, we could be seeing a new low this month. So again, for now, guys, be very careful here. Keep an eye on this 1488. If it gets a push above it, then this is our little neutral territory. And to be honest, in terms of even like being positive here, probably still for us, this level is the more positive one, the 1520 zone, because this way this way gold would break this upper side of the falling channel formation, and of course would drift above this high of the 3rd of October, and then we could aim for higher levels because this would confirm a forthcoming higher high and more buyers could be joining in. So in a way, any kind of move here higher inside this falling channel, it could be seen as a temporary correction. So that's why I should say that the bulls should not get their hopes up too much. If we see this one pushing higher, this is the level that we need, the 1520, in order kind of to aim for higher levels. So for now, we're going to monitor the downside mainly, and we'll keep an eye on this 1488.5 zone for today. We'll see how it's going to perform. If it travels higher, this is our little kind of very neutral territory here. If it travels above this 1499 zone, or in a way the 1500 level, then we will consider a possible test of this upper side of the falling channel, but then we'll take it from there. We'll see what it wants to do. If it wants to break it, then yes, wonderful news for the buyers. If it stalls here, we could see another round of selling. So keep your eyes on this one. Quickly jumping into a few pairs, just want to kind of run it through them quickly. So had a nice move higher on on Friday here on NZDUSD, but this morning you can see it sliding back down. This is the level we're keeping close eye on, the 0.6349 zone, or in a way 50. You could round it up towards the 0.6350. A nice good pop, and ideally maybe a nice close above this level could do the trick here for more buyers, because as you can see last week, yes, it traveled higher. It managed to kind of test this 0.6350 territory, but then kind of neither of the 4-hour candles closed above the 200 EMA. So this is kind of a bit of a worry sign, but could be a worry sign. But in order for us, let's say, to consider the downside now, ideally we would like to see a drop below the 0.6280 zone here, and only then aim for lower levels. Until then, we're going to continue observing this one, probably maybe somewhat more neutral will remain for now, but again, if it has a nice push above the 0.6350, then yep, this could be quite interesting for the buyers, and the next potential target for us could be around here. Actually, let me just adjust this very quickly, and that's approximately around the 0.6410 zone, so keep your eyes on this one. USDJPY managed to test the 108.48 zone, which it kind of struggled to, let's say, close above it. So and it did overshoot it, but as you can see, neither of the 4-hour candles kind of closed above it. So we're still keeping an eye on this one, because we had a nice, fantastic rally here in USDJPY. In a way, there is a chance for this one to continue, but in this situation now, we will wait for a push, a nice good push, and maybe a close of a 4-hour candle at least above this 108.48 zone before examining higher levels. Now, again, for now, given the sharp uprise that we already had, so there's a possibility maybe to see a bit more correction here, maybe moving back down here towards the 107.90 territory, and if it holds, we could see another a curve up here and a push higher. But even in that situation, still we are going to be waiting for a push above the 108.48 zone. So that's why, guys, long story short, we're not going to do anything from around here. Basically, we're just going to wait for this move out of this potential range here a little bit. So it's not an ideal range. We do have a bit of a gap here, kind of space here. So but for now, you can see that it's currently kind of stuck here. So let's see if this upper side of this range will get broken. If it doesn't, then we could see deeper declines here. But again, even inside this range, for us to target, let's say, the lower bound of it, ideally we would like to see a drop below this little tentative upside line and a drop below the 107.33 zone, and only then we will aim for for lower levels. USD-CAD sold off. USD-CAD sold off nicely. So basically, I talked about this one on my traders Espresso on Friday, and I was telling you guys to keep an eye on this 200 EMA. So if that gets broken, then yep, this could send the pair further down. Our target will be around the 1.32 zone. We overshot that, and managed to reach. Let me just quickly put this one on the chart. We managed to reach the area around the 1.3166. Now, given that the pair has climbed back above the 1.32 zone here, this, of course, kind of is leaning more towards maybe a larger correction before another leg of selling. So this kind of scenario could play out. So in a way, we could see a bit of movement here higher, maybe towards the 1.3225 zone, something like that. But or even like maybe towards today's pivot, which is around the 1.3222, something like that as well. But again, for now, looking at this picture, it's not really looking good for the pair. And if we see another round of selling here and a potential drop here below the 1.3166 zone, yep, this is where it could become a little bit more interesting again for the sellers, and we could aim for the 1.3129 zone, which is the lowest point of September. Now, very exciting times right now here for the bears. For now, we're going to keep an eye on this potential scenario where we could see maybe a bit more correction to the upside and then another leg of selling. In order for us, let's say, to consider maybe a bit of higher levels here, a push back above the 1.3284 zone, 85 area, approximately around here, could in a way do the trick here for the buyers. And to be honest, actually, let me just reiterate that. Let me just adjust because this, I believe that could be no longer valid, and this is what we're going to be looking out here for. There we go. So I'll rephrase that a little bit. So the 1.3265. Now this is where it could start to be looking good for the buyers again, potentially because we would also see the rate traveling back above its 200 EMA and maybe even back above all of these other EMAs as well. So that's why, guys, for now, keep your eyes on this level here, the 1.3265. And if we do get a push above it, then yep, we'll aim for slightly higher levels, but still will be very cautious because in order to get really comfortable with the upside, a push above the 1.3348 zone it would be needed. So keep your eyes on this one. GBPUSD. So GBP, the pound, of course, had a fantastic Thursday and Friday last week. Managed to explode to the upside. And looking at this pair here, the GBPUSD. So initially on Thursday, it blew up to the upside after finding good support near the 1.22 zone. I kept talking about this area, guys, last week, and basically I was saying that if we see a drop below this, then yep, further declines could be possible. But as you can see, it never fell below it, and it acted as a fantastic area of support from which like I said, the pound exploded to the upside on Thursday, and then kind of followed suit on Friday. So on Friday, what I was talking about was that if we see a push above the 1.25 zone, then yep, we will aim initially for the 1.2582, 84 zone here. We've managed to overcome that easily, and the pair managed to reach the area around here, around the 1.2707 zone. So that's going to be an interesting level for us to watch now, because you can see that the pair has retraced lower. Yes, that's normal. The only thing is that it's currently balancing just slightly above its pivot, slightly above the 1.2582 zone. Let's see how it's going to play out, because for now, to be honest, still we are more bullish than bearish on this one, or should I say at this point in time from the very short-term perspective, because don't get me wrong, the Brexit kind of issues are still floating around, and this week this week is going to be an interesting one. So we do have the EU summit on Saturday, and that's why we could be getting some headlines. And keep an eye on the headlines, because that's the main driver of the pound right now. So for now, if the headlines will continue coming out positive, then yes, we could see this one pushing to the upside again. But if we do get some sort of a negative line, then yep, we could see a move back down here. But for us, from the technical side, to consider the downside again, ideally we would wait for a drop back below this downside resistance line. This one's taken from the high of the. Let me just scroll this one up. There we go. This one's taken from the high of the 5th of May, and of course a drop below this line, and drop below this downside line, and a drop below the 1.2411. In a way, could do the trick here for the sellers, and we could see more of them jumping in and potentially driving this one to the downside again. But if it continues to hold around here somewhere, then for us to consider, or should I say to get comfortable with higher levels, a push above last week's high would do the trick here above this with this 1.2707, and then we could aim for the 1.2784 and even for some higher levels again. But for now, guys, stay careful, because as you can see, the pair is currently balancing near its pivot, near this high of the 20th of September, around the 1.2582. If it starts dropping below this, then we could see a possible test of the 1.25 zone again. So keep your eyes on that one. If it holds, if it continues to trade above it, then we could see this one maybe pushing back to the upside here, curving back up here, and then we will aim for this 1.2707, a break of which would confirm a forthcoming higher high and could open the path towards higher levels. So it's quite an interesting situation here right now. At the same time, very risky because of the way this pair is trading right now, because of the headlines and so you'll have to be kind of keeping an eye on all of the headlines basically, guys, because like I said, that's what's driving the pound pairs in general. So keep your eyes on this one, guys. Very interesting pair. Let's see if it actually manages to continue pushing further north this week. For now, yes, you can see that it's starting to drop below this 1.2582, but of course we could get just a false breakout here for now. So keep your eyes on this one. GBP NZD. So after it managed to reach the psychological 2 level. Also, of course, it exploded on Thursday and Friday. Managed to break above this downside resistance line taken from the high of the 20th of September. It traveled and this is what I was talking about. If we see a push above the 1.9620 zone, then yep, we will aim for the 1.9872 area, approximately around here. It did manage to overshoot it and traveled all the way towards the psychological 2 and actually overshot the psychological 2 level as well. So, but it was quick on Friday. Quickly, the pair started retracing back down. So the picture that we're seeing here is something a little bit more positive than on the GBPUSD because it seems that the pair is forming something of a bullish flag here. So in a way, for now, this is the pole, this is the nice flag here, or should I say maybe pennant, and we could, in a way, according to theory, yep, we could see a nice push to the upside later on. So in a way, for now, the pair is retracing. It could travel a little bit lower still. It could maybe test the pivot or maybe this area slightly above it near the 1.9872 zone. Around here, and if it holds, if all this area holds, we could see this one curving back up here and pushing to the upside. But for those who are more on the cautious side, just wait for a push above the psychological 2 level again, and then we will aim for the upside again. So this is where we could get a little bit more comfortable with the upside. For now, any kind of move lower, still up until this 1.9872 would be seen as a temporary correction before another leg of buying. If we start seeing a drop below the 1.9872, then keep your eyes on the 1.9782, 83 territory here, previously acting as a very good area of resistance. Now it could play the role of support, but if this suddenly starts sliding back below the 1.9620 zone, then now this is where we will start maybe considering lower areas again. We will probably abandon this downside line, no longer kind of valid. So if we see a drop back below the 1.9620, then yep, we will aim for the downside again a little bit here initially. But if it starts dropping below the 1.93, this is where we will get a little bit more comfortable with further declines. And the last pair for this session, oh, and by the way, for the GBPNZD, if we get a pop above the above the psychological 2 level. Now, before I jump into euro dollar, for this one, I need to jump into a daily chart here on the GBPNZD, and as you can see where we are right now. So it's like the psychological 2 level was near the highs of May this year as well. So in a way, if the pair closes above the psychological 2 level and pushes further north, then yes, it would create a new high for this year, and we could start aiming for levels. And let me just show you what I'm talking about here. We could start aiming for levels here that were seen in October 2018. So initially we'll aim for this 2.02 area. We'll round it up here. That's near the intraday inside swing low of the 8th of October. And then of course it could continue pushing further north, and we could then target the highest point of 2018, and that's around the 2.0474 zone. So keep your eyes on that one, guys. And the last pair is going to be euro dollar. So quick mentioning of this one. So we had a fantastic push higher. I've talked about this pair a lot last week, and basically I was telling you guys to keep an eye on the 1.10, the psychological 1.10 zone, the downside resistance line, and of course this 200 EMA here on the 4-hour chart. Now also what I was saying, to keep an eye on the 10.24 zone. So it managed to break above it, and it opened the path towards higher levels. The pair managed to reach the area around here near the 1.1063 zone, approximately around there. So in a way, we can see that the pair is retracing a little bit right now, but as long as it remains above this upside, this tentative short-term upside support line, we will continue aiming to the upside. Also, it might not travel even to this upside line. It could stall just around here, somewhere near the 200 EMA, and then make another move higher. So in a way, this kind of upside line is kind of the last resort here for the buyers to step in. But if the rate starts falling back below this downside resistance line taken from the high of June, now this is where it could become again interesting for the sellers. So of course, we will initially aim for this level right here around the 1.0943. But if that fails to withhold, now this is where more of the bears could be joining in and potentially driving the pair towards the lowest point of October so far, and that's around the 1.0878 zone. So keep your eyes on this one. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on at my Traders Tea Time, as always, that's 13:15 GMT. We'll have a look at some of these pairs again. And we'll see how they've performed. Today could be a bit of a or should I say a relatively quiet day in terms of economic data releases. So, but still we may be driven by some headlines, trade wars, Brexit. So those are still up in the air. So yep, it's on that front, it sure is not boring. So. I hope I'm not going to have any issues today in my traders with my traders tea time. So yep, we should run as normal. So yep, guys, like I said, I'll see you then. Thank you very much and have a nice day. Thank you. Bye bye.